What is up, you guys? We are back for a quick emergency video on Elrond eGold. We've started to see a little bit more of a correction over the last couple of hours, and what I want to do real fast is give you an idea of where I think the downside targets are if this correction keeps moving, and what to look out for in case we start to see this going back up. One thing to note, I'd mentioned last time that I was going to do an Elrond economics video. That video is going to be a little bit delayed. It might not be coming out until early next week, and the reason for that is for some reason YouTube decided to demonetize my videos today. I don't know why, to be honest with you. They put like, it says reused content is why I was demonetized, and I'm like, okay, what am I reusing? I don't get it. So they don't give you any feedback on why they demonetized it. They just give you 30 days to reapply. So basically what I'm doing is I'm spending some of my spare time to go through my videos, change some of the thumbnails, like review some of my old live streams and videos, and try to figure out what it could be that they're talking about and delete some of those videos off my YouTube page. So if you have any feedback, if you can look at my videos and tell me what you think might be the reason that they would have done that, let me know, because I'm not really finding any useful information online. I contacted them on Twitter and they're not giving me any useful information either. Anyways, that's sorry for the long-winded story on that, but any help you guys can provide on that, just let me know, because it kind of sucks, but whatever. I'm not going to stop doing what I'm doing. So the other thing that we are going to look into today is basically just the moving averages. So we're going to look at the chart, give you some targets, and then we're going to look at the moving averages, because those are looking pretty accurate for where this has been moving. So let's go ahead and get started. All right, the first thing that we'll look at is just the hourly chart, so we can get an idea of where this began. So we obviously saw the move up to 220. We came down from there back to this Fibonacci retracement line here, and we hit 190. That was about a day and a half ago. Then we came back up and touched 216. Then we had to move down to a pretty primary support level here at around 178, and we traded there for about a full day until today, when about 1, 2, 3, 4, 5, 6, 7 hours ago, we started to see a dip, and then we came back down. And in this last hourly candle, we went all the way down to 146 roughly, and now we worked our way up. We actually, that entire candle has been bought up so far, but we need to see that candle close, so we need this hour to end. There's another, there's another 12 minutes left on this hourly candle, and we really need to see what happens in the next 2 hours, right? Does it keep the downward momentum going, and does the volume and trading come back to below 160, like anywhere between 160 and 150? If that happens, then it could potentially be a sign that we're going to see further downside to the around 130 level, where we have a bunch more support waiting for us. So that's something key to look out for. The other thing to look out for is, do we see the next few candles start moving back up and breaking 180? If we start breaking 180 and breaking 190, that could be a good indication that either this correction's over and we're going to start moving up again, or B, if we start trading sideways again in that range between 170 and 180, but we don't set a new or high. So basically, if the trend looks like this, right? Let's make a line here. If the trend ends up looking like that, right, when we go up, we're hitting this line moving down, then what you can do is you can paint a pretty clear picture just using a triangle here, right? We paint a picture like this, and we say that, okay, that means that if this keeps following and we trade between these ranges, we could either see another downward move sometime tomorrow when we start hitting the apex of this, and then we move down to around 130, or if we start getting bullish momentum here and start breaking. So let's say these are the two scenarios, right? We come down and we start touching this line, and then when we hit around the end of this triangle, we drop down and we hit 130, and then we start monitoring the movement there. That's one possibility, okay? And what I'm gonna do is I'm just gonna save these. Let's hide that so it's saved for later. And then the other possibility is that we come down and touch this, or we just keep moving sideways and then we break out of this. Now, if that happens and we come down and we flip this line on top into support, that's a good sign, because then basically what that means is, you could end up seeing a move up from there. So these are like the two main scenarios we're looking at. So basically, if we see something like this, we move up and then we come down and touch this and bounce off of it, that's a pretty good sign that we're starting to move back in an upward direction. And then you're really looking to see, do we beat the high of 216 and 220. If we beat those, then it's a good indication that we're starting an upward move again. So really the next 24 hours are key to see which way we go throughout this triangle here. This is a pretty interesting area to look at, and I'm just going to go ahead and modify this a little bit so we're not dealing with this gigantic line. Okay, so let's do this and make this triangle a little bit easier for us to manage and look at. Okay, so here we are. Okay, so we have this, and what I'm going to do with this is I'm going to save this triangle so we have all these lines saved and we can look at this again tomorrow. It'll be a lot easier for me while I'm working on the YouTube channel to give you shorter videos and give you quicker updates based on what's happening. And then once I figure out this whole demonetization thing and update my videos or delete some old videos, I'll be able to put more time into making the actual content I want to make. So that's the key thing that we're looking at right now. Now what we want to look at is the moving averages. All right, the moving averages are super important as well. And we'll also look at the TD sequential. So we're going to look at the moving averages on the 4 hour. Well, first of all, if you look at the moving averages on the 1 hour, these are the so right now we're looking at the exponential moving averages. They're going to be different on every time frame. So on this time frame, you can see that we've broken below the 100 exponential moving average. This is on the hourly time frame, which means we expect support down at 140. We saw support like almost right at that level. We also saw that we were trading on these two moving averages in the red and orange in the background. Okay, now I don't like to look at moving averages on the hourly chart, to be honest, but we're gonna show them to you, or I showed them to you just so you can see the difference when you switch time frames. So when you switch time frames and we're looking at the 4 hour time frame, you see on the 4 hour our 20 exponential moving averages here in red. We were actually on this line for quite a while. If you go back to the bull run where we moved up from $30 all the way up to $100 to $200, we were trading right on that 20 exponential moving average on the 4 hour. We actually started to pass it. And once we started to pass it and we went really far above it, we came down and we got support on that moving average. We hit it numerous times. Now we've fallen below that moving average and we're getting support on the 50 exponential moving average. Now these are good signs. That means that the moving averages are holding as good support levels, which tells us that if we fall through the 140 level, then we can expect support in between 110 and 140. So there's a good chance that we would trade in this range if we fall below the orange line. At this point, we were bought up so quickly from the orange line, we're not really sure if we're going to fall below that again, or what we might see instead is the 100 exponential moving average start moving down a little bit. These moving averages could all curve like this. Now, if they end up curving like that, basically what that's telling us is that the price may sit at 160 to 170 for a while, maybe even 3-4 days, while we start rebuilding the moving average for another run up. Now, that's a possibility too, so keep an eye on it. I think on the 4 hour, the moving averages have been really accurate. So if you're in TradingView, you can just do a search on indicators for EMA and look at the EMA moving average, the one that has the 20, 50, 100, and 200 exponential moving averages. Now, if we go on to the daily chart, we can see that we are still, hang on, if we go into the daily, we can see that we are still far above the 100, or I'm sorry, the 20 exponential moving average on the daily. And you can see even on this daily chart, we were always trading the entire way up on this 100 or 20 exponential moving average. Sorry, the red one is the 20 exponential moving average. So we were trading on that 20 exponential moving average for a long time on the daily. And as we started to get really bullish at about $40 and moved all the way up to 200, we went far above that 20 exponential moving average on this daily chart. So at a daily time frame, that means one of two things, right? If we stay at these levels here between anywhere from 150 to 200, like it's a pretty big range. If we stay in that range, then pretty much what you're going to see is over the next week or so, you're going to start seeing that this moving average is going to slowly creep its way up. Now, as this moving average creeps its way up, if the price stabilizes where it is, then it's very likely that you see the price move like this and bounce off this moving average for another move up. Or they meet, the price could stay stable a little bit longer, and then we could come back to a time when we're trading on that moving average. And that's kind of what you want to see. Based on these moving averages, the correction is not unexpected. You know, what we don't want to see is we don't want to see ourselves on the daily time frame fall below the 20 exponential moving average. That's at the 100 level. So if we were to fall all the way down there, that means that support below that doesn't strike in until around $67. And that's a massive drop from where we are now. So I find that to be unlikely because still even these red candles on the daily have been bought up very, very high. And we're basically not seeing too many candles now on the way down that are not being bought up, right? What would not be good to see is to see a big thick candle on the way down that's not being bought up. So as long as you're having a correction and the volume is being bought at that level, that's a good sign that your exponential moving average is going to move up, your price is going to adjust, and then you're going to get back to a point where you're on that line and the price can start moving up again. But keep it in mind, you got to take everything with a grain of salt and you got to watch these things because this is going to give you an idea of what may be happening in the short term. Now, anything else we need to look at? I think that's about it. So just to do a very quick recap, okay? So you have a price level sitting on the 4-hour chart at around 170 where we were trading for quite a while. That's where the 20 EMA is. Now we're like just slightly close to touching the 50 EMA, which is sitting at around 140 right now, but we've been bought up. So the key right now in the short term is to see, do we break past around 189 to 190 and do we continue to trade at the 170 level and stay above this red moving average, which is the 20. If we stay above the 20, then that's a good sign that we are seeing, you know, not very bearish momentum. We're seeing some sell-off and then we're seeing people purchasing. And that's pretty much exactly what you saw in this 4-hour candle. You saw sell-off and then you saw people buying the sell-off. That's what you want to see. You don't just want to see sell-off, sell-off, sell-off and nobody buying the volume. Because if that's happening, then you're looking for a big crash. But right now, there's nothing to indicate that this is going to be a massive crash. But if this candle turns fully red and hits the orange moving average again, and then drops even lower and we start coming close to this moving average, which is the 100 exponential, then we might be looking for a bigger drop and a bigger correction. Now, finally, just to wrap this up, the last thing to do is to look at the RSI. Now, the RSI on the 4-hour chart is looking beautiful. It's sitting at 50 again, and ideally what we would see here is a very slow move up over the next day or two. That would make sure that the RSI on the 4-hour doesn't spike up. Instead, it starts moving up slowly. That'd be really good. That way, this drop would have a lot more meaning in the near future. And then on the daily chart, you can see that we've also made a good drop down. The RSI was sitting at 97, which is extremely overbought on the daily. Now the RSI is coming back to around 79, which is way better. That's much, much better. We still actually want the RSI on the daily to go a bit lower. So the ideal situation for the RSI to go a bit lower, but the price to stay stable, is for the price for the next day or two to trade between like 170 and 180, like to stay in that level. And if we can stay at 170 and 180 within the next 24 to 48 hours, and then we see another drop back to around 140 maybe, or 135, if that could happen, I mean, I don't know if it'll drop that far again. It's very hard to tell, but if it does drop again like that, then that's going to bring the RSI on the daily back under the 70 level. And that's really good. I mean, if the RSI could come back to around 60 on the daily while maintaining price, you can't ask for anything better. So keep an eye on everything. I hope this gave you enough information. I hope it was valuable. If you have any feedback for me, let me know. If you happen to have any experience with YouTube and you know why they might have flagged me for reused content, let me know. I'll be working on that whenever I have time over the next few days to, you know, like I said before, remove content or change thumbnails or whatever. I don't know. Okay. Anyways, that's everything for today. Drop me any messages or comments you have. I will talk to you guys soon. Have a good one. Peace.